Rain drums against the West Wing's marble facade. The city sleeps. Inside, the switchboard flickers. A red light blinks. Secure line. A voice, low and unhurried, speaks into the receiver. Get personnel on the line. Now, no mention of national security. No reference to the Treasury, the Pentagon, or the Joint Chiefs. Just personnel. The operator hesitates. The clock reads 2:17 a.m. A file is pulled. A name is flagged. Governor Lisa Cook. Remove her. Effective. Immediately. No reason given. No paper trail requested, just the order. Spoken, received, executed. The operator types. The system logs the directive. A digital footprint, small and cold, is laid down in the archives of power. This is not how it's supposed to happen. The Federal Reserve was designed to stand apart, insulated from midnight calls, from political whims, from the rhythm of election cycles. Its governors serve 14-year terms for a reason: to outlive presidents, to resist pressure, to act not for the next quarter, but for the next generation. And yet, in the dark, with a single sentence, that boundary is crossed. Not with a speech, not with a press conference, with a phone call. By 5:48 a.m., it explodes. The Fed has lost its way. Weak on inflation, soft on policy, and now compromised by political loyalty over economic sense. Governor Cook is out. No official statement, no letter from the president, no press briefing, just 280 characters. The tweet goes live from Ob POTUS, verified permanent. Within seconds, it is shared, dissected, translated. In Tokyo, a trader sips cold coffee, eyes locked on the Bloomberg terminal. The Nikkei stutters. In Frankfurt, a senior economist pauses mid-sentence on a live broadcast. Hold, did you see that? In Johannesburg, a finance minister's phone buzzes nonstop. The rand trembles. And in Ann Arbor, Michigan, an 82-year-old woman sits upright in bed. The television glows. She sees her daughter's face, not in motion, but in stillness, a photo from her confirmation hearing. She doesn't cry. She doesn't shout. She simply whispers, "They did it." Lisa Cook wakes to silence. No call from the White House, no message from the Chief of Staff, no lawyer, no liaison. She checks her email, her calendar, her access to the Federal Reserve's internal portal. Denied. At 7:15 a.m., 2 security officers arrive at her DuPont Circle apartment. Not to speak, not to explain. They take her badge, her encrypted phone, her access card. By 8:47 a.m., her office on Constitution Avenue is empty. Desk cleared, bookshelf bare, nameplate removed. No farewell note, no farewell call, just absence. Lifetime of scholarship. A career built on data, on history, on the invisible architecture of inequality, reduced to a box of personal effects handed to an aide by the loading dock. She did not resign. She was deleted, not fired. Not challenged, not debated. The opening bell rings at 9:30 a.m. The Dow drops 312 points in the first 10 minutes. Then 400 bond yields spike. The dollar wobbles. Analysts scramble for language. Unprecedented. Unsettling. A breach of institutional trust. In London, a hedge fund manager cancels a meeting. If the Fed isn't independent, then what the hell is? In Shanghai, the People's Bank of China monitors the feed. No comment. But the data is logged. The precedent noted. This is not a reaction to policy. It is a reaction to power. To the sight of a black woman, the first of her kind on the Fed board, removed not for misconduct, not for incompetence, but for disagreement. And the markets, cold, rational, global, respond before a single senator has even opened their inbox. Finance moves faster than democracy. It always does. Hours pass. No emergency meeting is called. No statement is issued. The other governors, men and women sworn to independence, say nothing. One texts a colleague, "What do we do?" Another deletes a draft tweet. The chairman remains in his office. Lights off, door closed. The silence is not neutrality. It is submission. Because if the Fed cannot defend one of its own, a governor removed without cause, without process, without warning, then what is it defending? Not inflation targets, not employment metrics, not the economy. It is defending its own survival. And in that silence, the message is clear. The firewall has cracks, and someone just walked through. Later that evening, in the dim light of her kitchen, Lisa Cook sits at the table. A single sheet of paper lies before her, typed, formal, cold. I hereby tender my resignation as governor of the Federal Reserve Board. It is not her handwriting. It is not her decision. She never signed it. But somewhere, in a White House file, it now exists. A fiction made real by power. She stares at it. No anger. Not yet. Just recognition. This is not about economics. It is about who gets to speak, who gets to stay, who gets to be believed, and who can be made to disappear, quietly, cleanly, without a trial, without a hearing, without a fight. The paper does not burn. It does not crumple. It just sits there. A ghost of consent. A monument to erasure. By nightfall, the question echoes across cable news, social media, financial briefings. A reporter, live on air, turns to the camera. Let's be clear, no Fed governor has ever been fired like this. Not in 110 years. So why her? Why now? No one answers, but the camera holds, the silence stretches, and in that pause, the real story begins. Not about a tweet, not about a firing, but about a woman who dared to say that inflation hits harder in Detroit than in Delaware. That credit is not colorblind, that the past is not past, and that power, real power, does not come from speeches. It comes from silence, and who gets to break it? Woodrow Wilson signs the Federal Reserve Act in a hushed East Room ceremony. Black and white footage flickers. Men in stiff collars, solemn faces, the weight of history on their shoulders. The idea was radical for its time. A central bank, independent of politics. Not controlled by Wall Street, not answerable to the White House. A buffer between the chaos of markets and the whims of power. Marble halls, hushed chambers, decisions made in silence, far from headlines. For over a century, the myth held. The Fed acted. Presidents complained. The system endured. Its governors were technocrats, discreet, data-driven, invisible. They spoke in riddles. Transitory inflation, liftoff, quantitative tightening. The language was meant to exclude, to protect. But now in 2025, that myth lies shattered. A governor has been removed, not through resignation, not through scandal, not through law, but by tweet. And the question echoes. If the Fed is no longer independent, what institution is? The fortress had a door. Someone just kicked it in. She studied lynchings, not as history, as economics. In a 2011 paper, she showed how racial violence in the early 20th century didn't just terrorize communities, it crippled economies. Black entrepreneurs vanished, businesses closed, innovation stalled. The damage wasn't just morale, it was monetary. The paper was rejected. Twice. Niche, one journal called it. Not central to macroeconomic discourse, said another. Years later, it would be cited in Federal Reserve reports, taught in Ivy League classrooms, quoted in congressional testimony, because the data was right and the economy had finally caught up to her. By the time she joined the board, inflation wasn't just a number, it was a pattern, hitting harder, in black and brown neighborhoods where wages stagnated and credit vanished. She called it the inequality multiplier. She didn't just analyze the economy, she diagnosed its scars, and that made her dangerous. Not because she was wrong, because she was too right. The Senate hearing room is packed. Reporters, lobbyists, activists. On screen, she sits poised, calm, unflinching. A senator leans forward. Your research on racial violence, how does that qualify you to set interest rates? She doesn't blink, because inflation doesn't affect everyone the same. If we ignore who bears the cost, we don't understand the problem. The IAS room stirs. Progressives nod. One whispers, "She's going to change everything." Across the aisle, a senator rolls his eyes. Later, in a closed-door meeting, "She's not an economist. She's an activist with a PhD." The vote is 51 to 49, the narrowest margin in decades. Her confirmation isn't just a win, it's a warning. To some, she is progress, long overdue. To others, she is proof the system is being taken. And in that divide, the battle lines are drawn. Not over policy, over belonging. Who gets to shape the economy? Who gets to define what matters? The answer, for the first time, is no longer obvious. He called Jerome Powell a bonehead, then a terrible guy. Then, on Fox Business, "I should have picked my guy. I own the Fed." The words stack up, like indictments. At rallies, he rants, "They're killing the economy. Higher rates, lower growth, all to hurt me." To him, the Fed isn't independent, it's disloyal. Behind the scenes, aides report he sees central banking as personal betrayal. "I put them in place. They work for me." In 2019, he floated firing Powell that legal advisors warned him. "You can't." He replied, "Watch me." Now, in 2025, he's back, and this time, he's not targeting the chairman. He's targeting the symbol, because Cook isn't just a governor. She's proof the system doesn't bend to him, and that cannot stand. June 2025. Federal Open Market Committee meeting. Inflation is sticky. Markets jittery. Election year looms. The proposal, a surprise 25 basis point rate cut. Markets rally at the rumor. Wall Street cheers. But one voice rises in opposition. "We're prioritizing political optics over economic stability," she says. This cut rewards speculation. It punishes savers, and it hits low-income households hardest when inflation returns. She votes numbered her. The final tally, 7-1. The decision passes, but the die is cast. In the West Wing, the briefing is blunt. She blocked the stimulus. A senior advisor leans in. She's not just wrong, she's making him look weak. The president watches the clip of her dissent on loop. Silent. Still. Then, find a way to get rid of her. Policy was her job. But dissent, that was treason. Deep. In the bowels of the Government Accountability Office archives, a document resurfaces. Yellowed pages, faded ink. A footnote from a 46-year-old legal opinion. The president may remove a Federal Reserve governor for inefficiency, neglect of duty, or malfeasance, but the determination rests with the executive. No definition of inefficiency, no requirement for evidence, no judicial review. It's not a clear authority, but it's plausible deniability. White House lawyers gather in a windowless room, printouts, highlighters, legal pads. One circles the word neglect. "We can say she neglected economic unity," he says. Another, or that her public statements created market uncertainty. They're not building a case, they're building a pretext, and they're doing it weeks before the firing. Because in this game, justification doesn't come after the act, it comes before. And it only needs to sound legal, not be legal. She doesn't stay in Washington, she travels. Jackson, Mississippi, she speaks at a historically black bank. Monetary policy isn't neutral. It's a series of choices. Who gets credit? Who gets left out? The room erupts. Detroit, a union hall. When we say full employment, do we mean everyone? Or just the people easy to count? Young economists record her, share clips, quote her on social media. Geneva, an international finance summit. She stands beside central bankers from Norway, Singapore, South Africa. We measure inflation with baskets of goods. But who decides what's in the basket? Milk? Medicine? Bus? Fare? A governor from Chile later tells a colleague, "I've never heard money spoken about like this." Back in D.C., the West Wing watches the footage. Not her votes, not her models, but her reach. A senior aide turns to the chief of staff. She's not just influencing policy, she's changing the conversation. The chief of staff doesn't respond. He just closes the laptop, because they both know the truth. You can survive opposition, you can survive dissent, but you cannot survive a new narrative. And Lisa Cook isn't just speaking. She's rewriting the rules. In the corridors of power, the verdict is unanimous. She has to go, not because she's wrong, but because she's winning. Friday was chaos. Monday is reckoning. The markets don't rebound, they retreat. The Dow stays down. Bond yields climb. Mortgage rates jump a quarter point overnight. Small businesses in Ohio delay expansion. A tech startup in Austin cancels hiring. Factory in South Carolina pauses its shift rotation. This isn't panic, it's distrust. Not of inflation, not of growth, but of the system itself. Because if the Fed can be reshaped by a tweet, then no institution is safe. No decision is neutral. No number can be trusted. Wall Street blames Washington. Main Street blames both. And in the silence between trades, a new fear takes root. What if the economy isn't broken by accident? What if it's being broken on purpose? The White House insists the economy is strong, but the numbers no longer speak for themselves. They speak for who controls them. And the longer the silence lasts, the louder the message becomes. Delay was supposed to bury the story. Instead, it gave it time to grow. Brussels, a press room, fluorescent lights, a podium. The European Central Bank president steps forward. No fanfare, no emotion, just words carefully chosen. We trust in the independence of our counterparts. That's it. No mention of the US. No mention of Cook. No condemnation. But the subtext is razor sharp. Because trust is not a given, it's a conditional. And now it's been questioned. In Frankfurt, traders mutter, if the Fed's not independent, why are we using dollars as reserves? In Paris, finance ministers meet behind closed doors. One says, we've relied on American stability for 70 years. Maybe it's time to diversify. Germany accelerates its gold repatriation. Italy begins quietly converting dollar holdings into euros and yen. The statement wasn't a declaration of war. It was a quiet divorce, and it signals something far bigger. The post-war financial order, built on U.S. credibility, is no longer assumed. It's being reassessed. It starts on an encrypted forum, then a podcast, then a tweet with 2 million views. Audio, crisp, unmistakable. A woman's voice, calm, calculating. Cook wasn't fired for her vote. She was fired because she was winning the narrative. She made the Fed look like it cared about people, not just markets. And that's a problem when the president wants to look like the only one who does. Silence. Then a male voice. So we're saying she was removed for being too influential? Exactly, she replies. You can't have a governor out communicating the president. The recording is labeled West Wing Strategy Session, June 10th, 10 days before the firing. The White House denies it, but the denial lacks force. No lawsuit, no investigation, just silence. And in that silence, the truth settles. This was never about policy, it was about perception. Because in the age of attention, influence is power. And Cook had begun to own the story. Not through leaks, not through spin, but through moral clarity, and that more than any dissenting vote could not be tolerated. Constitution Avenue. Dawn. A crowd gathers. Not large, not violent, but present. Signs. Her research was right. Inflation hits harder in the hood. She wasn't fired. She was silenced. A young woman kneels by the steps of the Federal Reserve Building, placing a single rose. At the base of the flagpole, she whispers, "Thank you for seeing us." An older man in a Union jacket shouts into a megaphone, "They think we don't know how this works? They fire her, and the next month rates drop before an election? That's not policy, that's theft." Inside, a junior staffer watches from behind a curtain. He doesn't report them. He just closes the blinds, slowly, like a eulogy. For decades, the Fed stood for cold logic, numbers, models, distance. Now, it stands for something else. A symbol of exclusion, of power protecting itself. And the protest isn't just about Cook. It's about every voice that's been told, you don't belong here. Washington, D.C. Federal Reserve Boardroom. The table is long, the air is still. Chairman Powell sits at the head, hands folded, face unreadable. One governor breaks the silence. Do we challenge this? No one answers. Another leans in. If we do, what's to stop him from firing all of us? A third stares at the ceiling. We can't just accept this, it sets a precedent. But the fear is visible, not of being wrong, but of being targeted. One governor, a longtime centrist, mutters, "We're supposed to be above politics, but what if politics won't let us be?" Powell doesn't speak. He just taps his pen once, twice, one against the table. The room knows the stakes. Challenge the president, and the Fed could be dismantled. Stay silent, and it becomes irrelevant. They are not just debating a legal response. They are debating the survival of their institution. And in that moment, the truth is undeniable. The Fed is no longer a fortress, it's a battleground. Thacker, London, 3:17 a.m. The governor of the Bank of England sits in his study. Rain taps against the window. He dials a number, secure line. No record. The call lasts 4 minutes. No transcripts, no witnesses, but sources confirm the message. We're watching, and we're not alone. By morning, quiet signals ripple through central banks. Tokyo delays a routine dollar swap. Ottawa schedules an emergency meeting on monetary sovereignty. The Reserve Bank of India quietly increases its gold reserves. It's not a coalition, not yet, but it's coordination. A network of institutions, each wondering, if it happened in the US, could it happen here? And more importantly, what do we do when the anchor starts to drift? The call was never announced, but its echo spreads, soft, steady, and seismic. The global financial order is not collapsing, it's adapting, and the US is no longer leading the dance. Detroit, a community center. In Midtown, no stage, no podium. Just a microphone in the middle of a room packed with small business owners, retirees, students. She walks in without fanfare, dressed simply. No suit, no Fed insignia. She looks out, takes a breath. I was not fired for poor performance. Room stills. I was fired because I refused to pretend that economic justice is separate from racial justice, that inflation hurts everyone the same, that the past doesn't shape the present. A woman in the front row wipes her eyes. They said I was too political. But what is more political than deciding who gets loans? Who gets raises? Who gets left behind? She pauses. I didn't serve to be popular. I served to be honest. The room erupts. Outside, a journalist live streams. The video hits 500,000 views in 20 minutes. In Nairobi, a central banker shares the clip with her team. In Seoul, a student translates it into Korean. In Buenos Aires, a mayor quotes it in a council meeting. This is not damage control. This is reclamation. She is no longer just a fired official, she is a voice. And for the first time, the world isn't just hearing her, it's believing her. The narrative has shifted, and the White House has no answer. Washington, D.C. Federal Reserve Boardroom. A closed-door emergency session. The air is thick. No one speaks at first. 7 governors, 1 empty chair. Then, a man in a dark suit stands, not the chairman, not a firebrand, but a quiet man, a scholar. A survivor of decades in economic shadows, he clears his throat. The room stills. I served with Lisa Cook, he says. I didn't always agree with her, but I respected her independence and her integrity. He pauses, looks around the table. She was removed not for misconduct, not for incompetence, but for dissent. If that sets a precedent, then none of us are here by merit. We're here by permission. No grand gestures, no raised voice, just a truth spoken plainly. One governor lowers her eyes, another grips the edge of the table, a third gives a slow, solemn nod. Then, another hand rises. Then another. Not a vote, but a signal. The silence breaks, not with cheers, but with the weight of recognition. The Fed is no longer passive. It is resisting. The words land like a verdict. We are not staff, not aides, not appointees, not political favors. We are the Federal Reserve, and if we cannot act independently, then we have no function at all. He sits, no applause, no reaction, but the message spreads. Within the hour, the board votes, unanimously, to file a formal objection with the Government Accountability Office. A procedural move, but a declaration. This is not about loyalty, it's about legitimacy. Across town, in the West Wing, the briefing is tense. Jefferson turned on us, an advisor says. The president doesn't respond. He just stares at the live feed of the Fed's press release, because he understands what no one else in the room does. This isn't just about one governor, it's about control. And now the institution meant to obey is pushing back. The firewall wasn't just breached, it's being rebuilt from the inside. Orlando, Florida. A rally under red, white, and blue banners. The crowd roars. The music thumps. The president takes the stage. They want to stop me, he shouts. The deep state, the elite economists, the people who've been rigging the system for years. He leans into the mic. They fired one of their own for being too soft. But I fired one for being too disloyal. The crowd erupts. Then, the threat, not veiled, not subtle, clear, final. If they won't give me a Fed that works for the people, I'll appoint one that does. Loyal people, smart people, patriots. The camera cuts to a row of smiling donors in the front. One whispers, "He means our people." The message is unmistakable. He won't just replace Cook. He'll reshape the entire board, with economists from his resorts, pundits from his rallies, loyalists who know the only right answer is, "Yes, Mr. President." This is no longer about monetary policy. It's about takeover. Capitol Hill, Senate Majority Leader's office. Reporters crowd the hallway. Cameras roll. She steps to the podium. No smile, no theatrics. The Federal Reserve is not a cabinet agency. Its independence is not optional. It is foundational. She looks straight into the lens. We will not fast-track any new nominations until the legal and constitutional questions surrounding Governor Cook's removal are resolved. A beat. Then, the president does not get to fire dissenters and install loyalists. Not in this country. The gavel drops. The session adjourns. Across the aisle, even some Republicans nod. Not in agreement, but in recognition. This is no longer partisan. It's constitutional. The branches are now in conflict. Executive versus legislative power versus principle. And for the first time, the balance shifts. The president can fire, but Congress can block. And in that block, a warning, go further, and the entire system may crack. Detroit, a modest law office in a converted church. The filing is simple. The intent is not. Lisa Cook versus President of the United States. Cause of action. Violation of the Federal Reserve Act. Request. A declaratory judgment that unilateral removal without cause is unconstitutional. No demand for reinstatement. No call for damages. Just one ask. Declare the act illegal. Her lead attorney speaks to the IR press. This isn't about one woman. It's about whether an independent central bank can survive in modern America. Inside, Cook sits quietly. She doesn't watch the coverage. She doesn't celebrate. She opens a folder labeled Historical Precedents. Inside, a 1932 case where a president tried, and failed, to remove a comptroller of the currency, the Yao. Court ruled, independence is meaningless if it can be revoked by whim. She underlines the sentence twice. Because she knows this case isn't just about her. It's about every future governor who might dare to disagree, and every future president who might dare to punish them. D.C. Federal Court. A packed gallery. Press, lawyers, observers from the IMF. The judge enters. No drama, just duty. The ruling is read aloud. Deliberate, precise. The President of the United States does not possess unchecked authority to remove a Federal Reserve governor. The Federal Reserve Act limits removal to cases of inefficiency, neglect, or malfeasance, with due process. A pause. Then the line that echoes. The President exceeded his authority. A full hearing will proceed on constitutional grounds. The courtroom exhales. It's not final. No reinstatement, no injunction, but it's a crack in the wall. For the first time, the judiciary has said, "You went too far." And in that moment, the momentum shifts, not because the system is perfect, but because it responded. Washington. Federal Open Market Committee meeting. The vote is unanimous. Effective immediately, the federal funds rate is increased by 25 basis points. No prior leaks, no coordination with the White House, no courtesy call, just a statement. The Federal Open Market Committee acts in the national economic interest, independent of political influence. Markets react. The dollar steadies. Bonds stabilize. But the real story isn't in the numbers, it's in the act. For the first time since the firing, the Fed doesn't just speak. It moves, and it moves against the political wind. In the White House, the president watches the announcement on a loop. He doesn't shout, he doesn't curse, he just turns off the screen, because he knows what the world now sees. The Fed didn't collapse. It reclaimed itself. Not with a speech, not with a protest, but with a single quiet decision. We are still here, we are still independent, and we will not be silenced. Paris. A closed-door summit at the Ministry of Economy. No press, no live stream, but the transcript leaks within hours. The French finance minister leans forward, voice low but firm. If the United States can no longer guarantee the independence of its central bank, we must reconsider our reliance on the dollar for global reserves. Silence settles over the table. Germany's representative doesn't object. Italy's finance minister nods. Even the Dutch delegate, usually cautious, murmurs. We've assumed American institutional stability for decades. Maybe that assumption is outdated. This is not rhetoric, it is strategy. For over 70 years, the dollar has been the anchor of global trade, the default in oil contracts, the bedrock of central bank reserves, not because it's the strongest currency, but because the system behind it was trusted. Now that trust is questioned, not by enemies, by allies, and in that moment, the post-war financial order, built on U.S. credibility, begins to fracture. Not with a crash, but with a whisper. What if the dollar is no longer the only option? Riyadh. A press conference after a meeting with Chinese officials. A reporter asks, "Will Saudi Arabia consider pricing oil in currencies other than the dollar?" The energy minister pauses, smiles. Then, "We are open to all forms of financial cooperation. The world is changing. We must change with it." The room stirs. No direct answer, no official policy shift. But the signal is sent. Within minutes, financial analysts dissect the quote. Headlines flash, petrodollar under threat. Traders in Singapore and Frankfurt adjust positions. Because this isn't just about oil, it's about leverage. For 50 years, the petrodollar system ensured global demand for U.S. debt, kept interest rates low, and cemented American financial power, all because oil was priced in dollars, and nations had to hold them to buy energy. Now, that monopoly is negotiable, and if Saudi Arabia, the architect of the original deal, begins to walk away, others will follow. Not tomorrow, but soon, and when they do, the foundation of U.S. economic dominance begins to crumble. Beijing. A sleek, high-definition launch event, holograms, subtitles in Swahili, Arabic, Portuguese, a voiceover in Mandarin, New Horizon, a digital currency built for inclusion, stability, and sovereignty. The People's Bank of China announces pilot programs in 10 nations from Nigeria to Bolivia to Cambodia. No loans, no strings, just infrastructure, digital wallets, cross-border payment rails, local currency integration. It's not aid, it's architecture, and it's being offered to countries long excluded from Western financial systems. In Nairobi, a small merchant downloads the app. She sends a payment to a supplier in Accra. Instant. Fee-free. No bank, no delay. She smiles. For once, we're not waiting on their system. This is Beijing's moment. Not to condemn the US, but to replace it, not with ideology, but with utility. And as the yuan gains ground in places where the dollar was once king, the message is clear. Power isn't just enforced, it's offered, and someone just offered a better deal. Detroit, the same community center where Cook spoke. Now, it's packed again, but this time, not just with locals. Students from Howard, activists from Oakland, union leaders from Pittsburgh, they chant, "Her voice matters. The Fed belongs to all of us." A young woman holds a sign. They fired her for telling the truth. She live streams to 80,000 viewers. In Tulsa, a high school economics teacher plays Cook's speech in class. Students debate, should the Fed care about racial justice? A 17-year-old posts a video. Lisa Cook didn't just study the economy, she saw the people in it. That's why they fired her. The clip hits 2 million views in 12 hours. On TikTok, Cook fired trends. On Reddit, economists dissect her research. X, a Nobel laureate, quotes her 2011 paper on racial violence and innovation. This is not a media campaign, it's a cultural shift. The truth didn't win because it was official, it won because it was relatable. And in the age of attention, that's the only victory that matters. 3 cities. 1 statement: Detroit, New Orleans, Oakland. The mayors gather via video link, no fanfare, just a joint announcement. Effective immediately, our cities will accept tax payments in community credit, a local currency backed by municipal assets and designed to serve residents, not speculators. It's not legal tender, but it's real. A grocery store in Detroit begins accepting it for food purchases. A clinic in New Orleans offers discounts for payments in community credit. A youth center in Oakland uses it to fund after-school programs. This is not secession, it's sovereignty. A quiet rebellion, not against the federal government, but against the idea that money must flow only one way. And as more cities explore similar models, a new question emerges. If local systems can work, what do we even need the old ones for? It starts with a single document, an internal White House email dated June 12th, 2 days after the firing. Subject line: legal justification for Cook removal. The body reads, cite inefficiency due to public statements creating market uncertainty. Coordinate with comms to release narrative. Then a reply, can we backdate the review? Yes. Make it look procedural. The leak spreads like fire. News outlets dub it the retroactive memo. Legal analysts call it a smoking gun. Congressional investigators demand the full chain. The White House denies nothing. It just stops responding. Because the evidence is clear. The firing was political. The idea justification was invented. The process was a charade, and now the world knows. Not just that Cook was wronged, but that the entire narrative was manufactured. The cover-up didn't fail. It confirmed the crime. London. Downing Street announces, the Prime Minister has postponed his state visit to Washington due to scheduling conflicts. No mention of the Fed, no mention of Cook, but the message is clear. Tokyo follows. Then Ottawa. Then Seoul. Diplomatic engagements are delayed, not canceled, but paused. A signal. Meanwhile, markets remain unstable. Investors don't sell, they just wait. Emerging economies hedge. Central banks hold emergency calls. The IMF issues a quiet alert. Systemic confidence indicators are declining. In the White House, the president watches the news alone. The rallies still cheer. The base still believes. But the world, the real world, the one beyond speeches and tweets, is pulling back. Not in anger, not in protest, but in distance. The ultimate punishment. You are no longer trusted. And as the camera lingers on the empty diplomatic calendar, one truth becomes undeniable. He thought he was asserting power, but he may have just lost it. Washington, D.C. Federal Courtroom 3. The gavel falls. No drama, no outbursts, just a voice, steady and final. The president's removal of Governor Lisa Cook was not supported by statutory cause. It exceeded the authority granted under the Federal Reserve Act. The action was unlawful. A pause. Then the room exhales. Not reinstatement, not damages, but a declaration. One word: unlawful. It echoes beyond the courtroom, through newsrooms, through central banks, through history. Because precedent is not made by force, it's made by ruling. And for the first time in decades, a president has been told, "You cannot do this." The White House issues no statement, no appeal is filed, because the message is clear. Even power has limits, and this time, the system held, Capitol Hill, Senate chamber. No grand speeches, no standing ovation, just a vote. 228, Republicans and Democrats alike. The Federal Reserve Independence Act becomes law. It codifies what was once tradition. Fed governors can only be removed for cause, misconduct, neglect, incapacity, and only after a formal review by an independent panel. No more midnight calls. No more tweets. The president signs it without ceremony. No photo op. No remarks. Just a pen on paper. And in that silence, the meaning is clear. This is not a victory, it is a repair. The norm was broken. Now it is rebuilt, stronger, clearer, guarded. But the scar remains. Because laws are written not to celebrate order, but to prevent its collapse. And this one was written in response to a single act of vengeance. She does not reapply, does not seek reinstatement. Instead, she stands in a sunlit lecture hall at Howard University. Students fill the rows, cameras roll. "I don't need a seat at the table," she says. "I need the table to change." She announces the launch of the Economic Justice Institute, a research hub focused on inclusive monetary policy, racial equity and credit, and community-driven financial models. Funding comes from universities, foundations, even small dollar donors. One donation, $25 from a postal worker in Cleveland. Note attached: "You spoke for me." Her work is no longer confined to boardrooms. It spreads into classrooms, credit unions, central banks in South Africa and Norway. She is not in power, but her framework is, and that, in the end, may be more lasting. Washington. Federal Reserve Headquarters. A new report is released, not just on inflation, not just on employment, but on disparity. For the first time, the Fed publishes quarterly data on racial gaps in lending, regional differences in wage growth, access to credit in historically redlined neighborhoods. Chairman Powell speaks, "Monetary policy affects everyone, but it doesn't affect everyone the same. We can no longer ignore that." No fanfare, no press conference, but the data is public, permanent, part of the record. The shift is quiet, but seismic. Because now, every rate decision must answer not just, will it control inflation, but who will it hurt, who will it help? The Fed hasn't become political, it has become honest Wyoming. The annual Central Banking Summit, marble halls, suits, Nobel laureates, the global financial elite. She walks in not in a blazer but in a dress of kente cloth, deep reds and golds woven in Ghana. No invitation was required, she was asked. At the podium, she doesn't quote models, she tells a story. In 1921, a black entrepreneur in Tulsa opened a grocery store. By 1922, he was gone. Not because of bad business, because of a mob. We measure economic loss in GDP, but what about the loss of 1,000 Tulsas? Silence. Then, slow, scattered applause. Then a standing ovation. Not from everyone, but from enough, because she has done the impossible. She has made economics moral, and in that moment, the outsider becomes the voice of the future. A Swedish central banker is interviewed after the summit. Reporter: "What changed?" She hesitates. Then, "I came here to talk about interest rates. I leave thinking about justice." The clip spreads. In Canada, a policymaker revises a speech. In Brazil, a finance minister orders a study on racial wealth gaps. In New Zealand, a central bank governor cites Cook in a public address. The language is shifting, not just what is measured, but why? Because once you see the people behind the numbers, you can't unsee them. The dollar still trades strong, reserves remain high. But the share of global reserves held in dollars, down 5% in 6 months. Not catastrophic, but significant. And in boardrooms, from Singapore to Berlin, the question is no longer, should we diversify? But how fast? Because trust is not measured in exchange rates. It's measured in predictability, in independence, in integrity. And when a president fires a central banker for dissent, the world takes note, not of weakness, but of risk. The dollar's dominance was never just about economics, it was about belief. And belief once shaken is hard to restore. The empire didn't fall, it just lost its grip. And in the space between tweets and treaties, a new order begins. Washington, D.C. Federal Reserve Boardroom. The camera glides slowly across the long table, polished wood, silent microphones, 7 figures in suits, heads bowed over documents, and one seat, empty, not hidden, not replaced, just there. Sunlight cuts across the floor, catching dust in the air. A pen lies beside the chair, unused, waiting, no nameplate, no placeholder. But everyone knows who should be sitting there. The camera holds. No music, no narration, just silence. Because the absence speaks louder than any speech ever could. It is not grief, not regret. It is testimony, a reminder that power tried to erase a voice and failed, that independence is not guaranteed. It is guarded, and that sometimes the most powerful thing in a room is the space left behind. Detroit, a credit union in Midtown. Young woman sits across from a loan officer. She doesn't have perfect credit, no wealthy co-signer, but she has a plan. The form she fills out is different now. It doesn't just ask for income. It asks, how long has your family lived in this neighborhood? Have you been displaced by redevelopment? Does your community have access to fair lending? The officer reviews it, nods, approved. She smiles. Not the smile of relief, but of recognition. Because for the first time, the system didn't just see her numbers. It saw her, and it said, you belong. This is not revolution, it is reform, small, local, real. And it began with a firing that should have silenced a voice, but instead changed how the world listens. D.C., outside the Federal Reserve Building. A small crowd gathers, no officials, no press. Just people, a maintenance worker, a student, an elder from Southeast D.C. They watch as a plaque is mounted on the west wall, near the entrance where protesters once stood. The words are simple. Lisa Cook, first black woman governor of the Federal Reserve. She was here. She spoke. She mattered. No dates, no titles, no disclaimers. Just truth. A child traces the letters with her finger. An older man wipes his eyes. Because memory is not passive. It is resistance. And this plaque is not a memorial. It is a marker of who was removed, who returned in spirit, and who changed the institution even in exile. A quiet study, Evening light. An open book. Pages worn. Margins filled with notes. The camera zooms in. A sentence, underlined in yellow. Economic. Recovery cannot be measured in GDP alone. It must be measured in dignity. The same line Cook quoted in Detroit. The same line now taught in economics classrooms from Cape Town to Toronto. A student in Seoul photographs it for her notes. A policymaker in Oslo cites it in a budget proposal. Mayor in New Orleans uses it to justify a housing initiative. The highlight doesn't fade. The idea doesn't die. Because once a truth is spoken, especially one the powerful tried to bury, it finds its way into the light and stays. The screen fades to black. A single line appears, white on dark. The most dangerous thing a leader can do is tell the truth, especially when the system depends on you staying silent. Silence follows. No music. No fade out. Just the weight of the words. Because this was never just about a firing. It was about what happens when someone dares to say, "This system is not neutral. These numbers have names. This power is not yours alone." She was removed, but not forgotten, not undone. And in the end, the greatest threat to tyranny is not rebellion, it is clarity, the kind that comes not from rage, but from research, from data, from a voice that refused to be quiet. The screen holds, then fades. But the question remains, who will speak next?